You have a really interesting story in this space.
Becca Rubenfeld is the co-founder of AnchorWatch, a company building insured Bitcoin custody designed to protect long-term holders.
You operate in a totally different world, which is insurance.
Bitcoin is a valuable asset. Every mature asset class has a really robust insurance market, and it just wasn't available in Bitcoin. That motivated us to bring really affordable insurance to Bitcoin for the first time.
One of the challenges is, am I insuring against the asset value at the point when I purchased it? Am I insuring against the mark-to-market?
With Bitcoin, it's a very volatile asset. You can choose an insurance level that makes you comfortable. Maybe it's 5 million. Maybe you want to be as close to fully insured as possible. Ultimately, the choice is yours. Before, the choice wasn't yours. Bitcoin custody is actually very secure. It's cryptographically protected. It's the same general technology that protects nuclear codes. If the custody model is so secure, the insurance should be affordable.
Folks that you're talking about insuring are not like retail off the street. Maybe describe the types of people you think about institutional insurance coverage.
Sure, we actually...
What's up, everyone? I'm here with a really awesome and unique guest, Rebecca. What's up? From AnchorWatch.
That's right.
Super cool. You have a really interesting story in this space. So we're here at a Bitcoin conference, but you operate in a totally different world, which is insurance, which is not normally what you associate with. I'd love kind of for you to tell your story about like how insurance and, a digital asset, Bitcoin intersects and how you got in the space.
Sure. Well, how I got in the space was a bit of luck. I had a career in corporate America that had nothing to do with Bitcoin. I was orange-pilled, fell down that rabbit hole, was hanging out with Bitcoiner friends, and we had the idea that, hey, Bitcoin is a valuable asset. It's becoming more valuable every day, and every mature asset class has a really robust insurance market, and it just wasn't available in Bitcoin. There are some policies out there, but there wasn't the opportunity for individuals or businesses to just very easily get insurance coverage on the Bitcoin and necessity. And so we looked to fill that gap. We've been building for about 3 years, and we launched the customers in January with the backing of Lloyd's of London.
Oh.
Oldest and most respected insurer in the world, A+ rated. They came in, we have our own custody platform. They audited that, feel really good about the custody model, and that allowed us to bring really affordable insurance to Bitcoin for the first time.
Well, hey, congratulations. It's unique to take something that's storied as Lloyd's and bring it to a space that's largely not been, well institutionalized.
Right.
So, I'd like to kind of maybe cover that because, this asset class has gone through a crossing of the chasm moment, right? It was obvious, when I was at conventions like this 10 years ago, there was 50 people in the room, and there was pirates and devs and, a very interesting crowd. But now, we have a very institutional cloud. We service corporate customers. The folks that you're talking about insuring are not retail off the street, probably. So maybe describe the types of people you think about, sort of institutional insurance coverage.
Sure. We actually can serve retail customers as well. So the policy is applicable to both individuals all the way up to companies. And so what we're seeing is interest from across the board. You could be an individual that has substantial holdings. Maybe you're using a custodian. Maybe you're in self-custody.
And there you're almost like a high net worth institutional individual.
You can view it that way. And then we're also talking to a lot of companies who they're making Bitcoin allocations on their as part of their treasury. They've got more of a traditional mindset where they're interested in having the price exposure to Bitcoin, which is why they're bringing on their balance sheet. They're willing to take that price volatility risk. They're not very comfortable with the custody risk on top of that. So when we bring in really high quality insurance, it kind of takes away the risks of loss from any sort of custody reasons, and they're left with just the price action that hopefully they're already familiar with when they went in. And it's a very appealing product. If they need to make their customers feel better, or their investors feel better, or their own shareholders feel better, that they know that this has reputable, high quality, very familiar insurance coverage.
Now, so I think one thing that's maybe it's a bit in the weeds, but it's an important detail here is if you're a public or a private company, and for whatever reason you have now Bitcoin on the balance sheet, It's now auditable. It's now, the Financial Accounting Standard Board has created, a way to be able to record it in your balance sheet and your general ledger. And then you're the CFO and you go, and I need to, and like all assets, I need to have insurance coverage for it. Before, like, the products you guys are working on, that was actually surprisingly difficult, right? Like, so can you describe if you're, MicroStrategy or Tesla back in the day, 2 or 3 years ago, what did you do?
So let's say you're a company and you want an insurance, the only real option was to get some sort of custom policy from Lloyd's of London.
Yeah.
And Lloyd's of London has been...
Maybe you could get Lloyd's, which, by the way, it was difficult to get Lloyd's back then.
It is still difficult to get Lloyd's.
Yeah.
It was a couple of years of working with them.
So you couldn't get Lloyd's. What do you do?
There really wasn't an option. So the only insurance prior to AnchorWatch really was these large omnibus policies that were at existing custodians. So if you were, say, an institution, really you were kind of forced to put it at Coinbase Prime or one of the other kind of large institutions. And those institutions did have insurance policies, and they still do.
Yes.
However, they are relatively small policies in relation to the assets that they own. So, for example, they might have 70 billion or 100 billion, or in the case of Coinbase, maybe 500 billion of assets. But the insurance policy that they hold is for 100 million up to Coinbase has a $350 million policy. The policy itself is a high quality Lloyd's of London policy, but in terms of the amount of coverage compared to their assets, it's very, very small. So customers, if the custodian did have a large loss, even if that insurance policy paid, it's just pennies on the dollar. And so effectively for the customer, the end customer, the owner of the Bitcoin, you're not going to be assured any sort of significant payouts if a loss occurs. So effectively, you really have been relying on the reputation of a custodian that they're going to take good care, because there isn't a backup plan in place that will make the customer whole. And so we came in and we were looking to do what we consider something better, which is insurance policies with the customer's name on the policy as the insured. Up to 100% of the value of their Bitcoin. And so really that is a shift in the marketplace that up until now, there weren't a lot of other options. If you wanted to go to Lloyd's direct, it's possible. You could get a broker and go to Lloyd's, and then you would have to go through a very lengthy underwriting process where they came in and they looked at your custody and they would determine if they feel comfortable underwriting the risk. And you're right, it is difficult because it takes a lot of due diligence to make Lloyd's comfortable with multi-million-dollar at one company.
Right.
So it was very, very hard, and we're looking to make it easier.
It makes sense. I mean, it's a massive asset class at this point, and you have institutions and companies now moving in very, very rapidly.
That's right.
And it can't be, especially for anybody who's at scale. If you're a private company that's like thinking about going public, or you're a public company, you actually have to have this stuff auditable, insured.
Yep. So a lot of prospectuses and disclaimers in Bitcoin related products and companies, you'll find something in the small print that more or less says, if insurance is available and economically feasible, it's required.
Right.
And so for a long time, that is a fair requirement, but for a long time, it either wasn't available, or if you could get a custom policy, it was very, very expensive. And so the companies would say, look, we shopped for insurance. The numbers that we heard were not economically feasible. We can't run our business on margins with that premium rate. Yeah. And so therefore, we're just passing on it for now.
Right.
So, now that we're in place, our premiums are very, very affordable. They're less expensive than gold custody policies. They're less expensive than fine arts and jewelry policies. Why? Because Bitcoin custody is actually very secure. It's cryptographically protected. It's the same general technology that protects nuclear codes. Yeah. And so we advocated on behalf of owners to Lloyd's that the custody model is so secure, the insurance should be affordable.
Right.
Right? So that was our approach.
I mean, but that's an incredible crossing of the chasm moment too, because, I think I saw you speak at one point and you were talking about, the fine arts market, and institutions and high net worth sort of understand that. And that's been around for a while. And then in some ways, it seems like you've modeled some level of like your approach after some of these like really unique asset classes, right?
That's right. Fine art is a perfect example of how our policies work. So let's say that you invested in fine art. You're an art collector, and let's say maybe you bought $1 million painting. Okay? So you have this beautiful painting, you have had it appraised at $1 million. With that in hand, you call your insurance agent and say, hey, I bought this painting, appraisal for $1 million. I'd like to buy $1 million insurance policy. That's totally fine. The insurance agent does not ask you to cut off a corner of the painting to pay for it. You take, dollars from another pool of capital, you pay your insurance premium, and now you are the proud owner of a $1 million insurance policy. Yeah. If the art market is super hot this year, the artist is super hot, halfway through the year, let's say that $1 million painting is now worth $3 million.
Yeah.
You have a choice. You can call your insurance agent and say, hey, my painting has gone way up in value this year. That doesn't make me feel comfortable. In fact, that increases my risk, right? Because it's more attracted to thieves. I don't like that. I'd like to increase my policy to $3 million. They'll send you a bill for a prorated premium for the year. And now you have a $3 million policy. And so it behaves very, very similarly. The other alternative.
Wait, I want to pause on that. Sure. So because this is, if I have like normal cyber insurance and all of these things that like a typical company might have,
right?
You don't look at that asset as like wild sort of volatility,
right?
And so here, one of the like more challenges is, okay, am I insuring against like the asset value at the point when I purchased it?
Right.
Now, with the financial standard board changing and we're going to mark to market the assets, like, am I insuring against the mark to market? So like that is kind of a unique difference than if I'm just running, dollars and euros on my balance sheet if I'm a company, right?
Correct. With our policies, just like that fine art policy, you get the amount of insurance that you pay for.
Yes.
And so the reason I like fine arts as the example is it's not as volatile as Bitcoin, but it can be quite volatile. An artist can get really hot really fast, and a $1 million painting could become a $10 million painting within a year. And so again, the choice is yours. Do you increase the policy to a $10 million policy? Or do you choose to say $1 million of coverage is enough for me and I'm going to self-insure the other $9 million of risk? So with Bitcoin, it's similar. It's a very volatile asset. You can choose an insurance level that makes you comfortable. Maybe it's $5 million, regardless of the price that goes up.
Right.
Maybe your particular comfort level, you want to be as close to fully insured as possible. And so you then make that phone call, you increase the policy size as the price goes up, but ultimately the choice is yours, which again is a big difference because before the choice wasn't yours. You couldn't increase a policy and remain fully protected.
Well, so I've got choice on where the asset goes. The other, I think maybe unique nuance of Bitcoin and the digital asset side, if I'm a company holder, is like, there's this concept of like self-sovereignty, self-custody in the Bitcoin world.
Yep.
And there's, I think, a wide variance.
Yeah.
And, you have everything from a little bit of a discussion on, is MicroStrategy going to, show proof of reserves? And is my institutional asset sitting at a centralized custodian? Right. But I need to have it insured, right? And so like in your world, how do you see like the balancing of all of that, of security, but having Bitcoin ethos and centralization versus decentralization, but a big company or a high net worth individual certainly isn't going to just like might have it in cold storage in like a hardware wallet. So like,
right.
How do you kind of balance all of these views for much more institutional clients?
So we think about that really every day. And our custody solution, we have our proprietary custody solution, is exactly oriented to kind of get the best of both worlds.
Yeah.
So with our custody solution, every customer holds their own private keys.
Yeah.
So you have your private keys, but while you're insured by AnchorWatch and backed by Lloyd's of London, we're also a required signer. However, our custody solution uses native Bitcoin tech called Miniscript, which enables what are called time locks.
Yep.
Time locks allow you to have time-locked ways to spend Bitcoin that unlock over time in case there's a catastrophe.
Yep.
So if something has gone wrong, we can wait a few months and then we have various recovery options. But at the end of your policy, once we no longer have liability, if you didn't renew the policy, it actually pre-programmed there in the Bitcoin blockchain.
Right.
It actually will revert to pure self-custody at the end of the policy.
Right.
So really what we've built is something where you have all this extra protection, and the protection comes in the form of us being a required signer while you're insured, but you still just revert to plain old self-custody. You don't have to ask us to give your Bitcoin back because this is pre-programmed into the vault. That's a huge difference. So you get really the institutional grade custody benefits of professionals, all this extra layer of security, without totally walking away from the benefits of holding the native asset and doing self-custody. So that's available today. Like I said, it's applicable to individuals and corporations.
And the other, and I want to pause on that because that's a really unique kind of hybrid solution, right?
Yeah.
Which is, that might have been a really technical when we're talking about SegWit and we're talking about like time locks.
Yeah.
But really your main option if you were an institution was just to kind of go like, I'm going to go store my Bitcoin elsewhere.
Yes.
And, one of the challenges with that is Bitcoin is decentralization. So if I'm just treating as an institutional client, I have a bank.
Yep.
And then that bank I'm trusting to have, a good insurance policy, that it has full coverage, which you're saying it's pennies in the dollar. Yep. And the worst case scenario is an FTX kind of situation.
Correct.
That sours a lot of institutional corporate clients if they were on the wrong side of that.
Correct. So with the vault design that I just described, we really think that we're kind of solving for that. But with some institutional clients, we understand that they either feel the need for or truly are required to use what's called a qualified custodian.
Yes.
So a qualified custodian is a regulated entity.
Yes.
And that means they're an OCC chartered bank, a state chartered trust, or a registered broker-dealer.
Right. Wow.
Now, having one of those titles does not automatically make your Bitcoin safer, right? It doesn't.
And most of the time, actually, it might make it worse.
Might make it worse, right? So, what we're working on now, and will come out in Q4 of this year, is AnchorWatch is becoming a qualified custodian as well.
Right.
So right now, there's only a handful of qualified custodians in the marketplace, and therefore, just like you said, people are forced to choose from these just very few auctions. There's a honeypot. They're not really insured. AnchorWatch is going to come on as the 5th or the 6th in the industry, but with some of these benefits and allow you to have the full insurance. So we think, especially as we get towards the end of this year, we're going to become really the preeminent offering for institutional customers because they're having, they don't have to expose themselves to the sole counterparty risk of just giving it to the custodian. But they check that box of using a qualified custodian with all the benefits that we talked about just a moment ago. I think it's going to be a really, really significant change for institutional options.
Yeah, I think that's a big, your guys' technical innovation for being able to still have a view of like, hey, we want to make sure clients be able to keep their own keys, which most of the time they can't. And then now you have qualified custodian, like, our experience working with so many large clients in a way where, if you're dealing with as many enterprise customers as we are and as many businesses we service, I think one of the things we learned was the best way to do that was to create these bridge and hybrid programs to make them operate their business as they normally did, but then get the advantage of, sort of this decentralized protocol we believe in so much. So,
well, and think about the second order benefits of holding on the balance sheet. So not only now does your company have the price appreciation benefit, you can also, once you have your Bitcoin, you can also borrow against that Bitcoin. Yeah. So it gives companies really a new debts auction.
Yes.
Just utilizing their Bitcoin as collateral. So there's a few providers out there in the space. Again, later this year, you would be able to be our customer, use our custody platform, have the insurance, but also borrow against it.
Sure.
And really unlock, a growth vehicle for your company.
Sure. Yeah. I mean, I think what we're seeing is both, an industry that is commercializing, an industry that's growing up, and then the financialization of those products.
Absolutely.
Which is cool while retaining, the key parts of the Bitcoin ethos.
Absolutely.
Which was always my concern, is ensuring that we have the key parts of what makes Bitcoin special, which is decentralization, open networks.
Ability to custody yourself. Yeah.
Correct.
These things.
Because we don't want to recreate another Wall Street.
Exactly.
Is the important thing.
Exactly. Today, a company could go and buy the ETF if they wanted to. If all they cared about is having exposure into Bitcoin price, there's an ETF for you. It's an option.
Yeah.
Right? But as you're pointing out, there are a lot of benefits to holding the native bearer assets.
That's right.
And as time goes on, things are very uncertain. You never know how important that will be. And so building products, building ways to hold it safely,
Yes.
that still give you those benefits is very, very important to the long-term survival and thriving of Bitcoin.
I love it. So clearly, the chasm is getting crossed on the institutional side. You guys have a really cool kind of approach. Rebecca, where should people find you and the company if they want to look at insurance solutions for you guys?
So AnchorWatch.com.
Okay.
So you can find information there. Anybody's always welcome to reach out to me directly at Becca@AnchorWatch.com, DECCA. And then we're on Twitter and other platforms as well.
Awesome. Love what you guys are up to. Rooting for you. Thanks for being with us.
Thank you. Thank you.